This week's mortgage question comes from Sandra McDowell of Ladysmith. Sandra says she's heard of the term mortgage assumption and was wondering if you could tell her what it meant.
Thanks, Sherry. That's a great question, Sandra. In the old days, and Alberta being the last province to allow this to happen, a person purchasing your home could assume your existing mortgage at the rate that you had it at, as long as they had enough funds to cover the difference between the purchase price of the home and your existing mortgage. So if you were buying a $500,000 house and there's a $400,000 mortgage on it, you'd have to have $100,000. What's happened is that they could also assume that mortgage without qualification, which would be really neat, because then you could kind of just assume your mortgage, put down cash, and nobody has to know the difference. Alberta was the last province that allowed that to happen, and that's now all changed due to the number of foreclosures, difference in business, or fraud done in terms of deals happening with housing. And so now you can assume the mortgage, but you now have to qualify with the bank that has that mortgage.
Right.
And that's a good thing that happens, because you as a seller, if I assumed your mortgage, you're still liable if I don't make the payments. Whereas if I assume your mortgage with qualification from the bank, now that takes you off the hook.
You can always get more mortgage information online by visiting billymac.com. That's Billy with an I, not a Y, mac.com, or by calling Bill at 604-684-4663. That's 604-684-HOME.